2025 has been a landmark year for the foreign exchange market. Currencies worldwide have seen dramatic shifts, creating both risk and opportunity for traders. The FX market is the world's largest, with trillions exchanged daily, a real-time measure of global economic health. This year, clear trends have emerged, making it crucial for traders to follow global events closely. Trading FX is about betting on one country's economy versus another's. Buying if you expect strength, selling if you expect weakness. The story of 2025 is one of two halves, a sharp US dollar decline, followed by a shift in market dynamics. We'll break down why the US dollar's value changed so dramatically and how the euro and Japanese yen responded. We'll also introduce CME Group, a central hub for FX trading, and the tools they offer for all experience levels. Our goal is to give you a clear picture of recent FX market history and the platforms that make trading accessible and secure. Understanding what drives currency movements, like economic policy, interest rates, and political stability, is key. By the end, you'll have a solid grasp of 2025's FX trends and the regulated environment where you can participate. This knowledge is your foundation for making informed decisions as you enter the world of FX trading. The FX market isn't just numbers, it's a reflection of real-world events. Let's dive into the year's biggest moves and what they mean for traders. The journey starts with the US dollar's early tumble.
The year began with a major event. The US dollar lost significant value, sending shockwaves through global markets. For traders, this meant FX futures contracts surged as it took more dollars to buy other currencies. This wasn't a minor shift. Major currencies rose about 10% against the dollar, a huge move in FX. Those who anticipated the dollar's weakness and bought other currencies saw big opportunities. The reasons were complex. Shifting economic expectations and central bank policies played a role. Imagine the US dollar as the anchor of the global system. When it drifts, every other currency moves. Some currencies, as we'll see, moved even more than others.
This dollar decline dominated financial headlines and forced traders to rethink their strategies. The key lesson: a strong, one-way trend can shape the market for months. The dollar's weakness made imports pricier for Americans, but boosted US exports abroad. For new traders, this period is a textbook example of how a single theme can drive the entire market. Staying informed about the US economy is essential. Its currency's performance impacts the world. The first half of 2025 was all about the dollar's fall. Next, let's see which currencies benefited most from this trend. The euro and Swiss franc took center stage.
As the dollar weakened, the euro and Swiss franc emerged as the biggest winners, each gaining about 14%. Traders flocked to these currencies, seeing them as stable alternatives during US uncertainty.
The euro's surge reflected confidence in Europe's economy, positive data, and expectations from the European Central Bank. Going long on our USD became a popular, profitable strategy.
The Swiss franc, known as a safe haven, attracted investors seeking stability. Switzerland's strong financial system and low inflation helped. The franc's surge showed classic risk aversion. When fear rises, money moves to safety.
The euro and Swiss francs' parallel strength defined the first half of the year. Not all currencies moved equally. Each is shaped by unique economic and political factors.
The lesson: spotting the strongest currencies in a trend is as important as spotting the trend itself.
The euro and Swiss francs' outperformance set them apart from the rest. Their moves were a masterclass in market momentum. But the FX market never stands still. The dollar was about to fight back.
Just as traders settled into the weak dollar trend, the market shifted. By mid-year, the dollar began to recover. This partial reversal didn't erase all losses, but it signaled a new direction.
The Australian dollar, British pound, Canadian dollar, and Japanese yen were hit hardest, falling nearly 3% against the dollar from July to October.
The yen dropped the most, driven by widening interest rate gaps between the US and Japan. This caught many traders off guard, especially those still betting on dollar weakness.
Interestingly, the euro and Swiss franc held onto most of their gains, creating a split market. Some currencies weakened, while others stayed strong. This divergence highlights FX complexity. Each currency pair has its own story.
The mid-year shift was a crucial lesson in market dynamics. Trends can reverse quickly, and flexibility is key. The dollar's rebound reminded traders that no trend lasts forever. Adapting to new information is essential for success. The FX market is a collection of unique stories, not just dollar versus the world. Next, let's look at where all this trading action happens. Enter CME Group. With currencies in motion, traders need a place to act. CME Group is one of the world's largest FX trading venues. It's a global marketplace where buyers and sellers trade futures and options on dozens of currencies. CME Group provides the technology, rules, and transparency that make trading fair and efficient. In early 2025, the platform handled an average of $96 billion in FX trades daily, offering deep liquidity. High liquidity means you can enter or exit trades easily without big price swings. CME Group's long history and public exchange model create a level playing field for all. Many major traders and institutions use CME Group to manage risk and speculate on currency moves. Understanding the role of a major exchange is fundamental for new traders. CME Group is the backbone of regulated, reliable FX trading. Now, let's explore the products and tools they offer. CME Group offers a wide range of FX futures contracts, 52 currency pairs, from majors to emerging markets. This variety lets traders find opportunities that match their strategies. One standout tool is the new Trading Simulator, a realistic, risk-free way to practice trading. The simulator mimics live markets, with advanced charting and real-time data, so you can test strategies and learn from mistakes. For beginners, the simulator is invaluable for building confidence before trading real money. CME Group also provides in-depth research, highlighting which financial data points move the FX market most. These resources help traders focus on what matters, like inflation reports and central bank decisions. By combining powerful products, a state-of-the-art simulator, and expert research, CME Group equips traders for success. Next, let's see how CME Group supports trader education and skill building. The journey doesn't end with tools, it's about learning and growth. CME Group goes beyond tools. They help traders build skills through a monthly trading challenge. This competition, held in the simulator, lets traders test strategies risk-free and compete for cash prizes.
The challenge encourages discipline, risk management, and real-world decision-making.
Competing accelerates learning and bridges the gap between theory and practice.
CME Group also offers a wide range of educational resources, from beginner courses to advanced webinars. Their accredited Introduction to FX course covers fundamentals like pips, leverage, and what drives currency prices. Ongoing webinars and articles keep traders updated on trends and strategies. CME Group's commitment to education empowers traders to improve and adapt. Combining practical experience with expert knowledge sets traders up for long-term success. But trading is only as good as the safety and trust behind it. Safety and trust are vital in FX trading. CME Group delivers both through regulation, clearing, and transparency. All CME markets are regulated by the U.S. Commodity Futures Trading Commission, protecting traders from fraud and abuse. Every trade is backed by CME clearing, guaranteeing payment and eliminating counterparty risk. This means you're never exposed to the risk of the other side failing to pay. Trading is fully transparent. Everyone sees the same prices and order information in real time. Price transparency ensures fair trades and a level playing field. Unlike unregulated markets, CME Group's structure protects retail traders from hidden risks. Regulation and transparency are the foundation of trust in FX trading. With these protections, traders can focus on strategy, not safety concerns. Next, let's look at what the future holds for FX trading. 2025's FX market taught us how quickly trends can shift and the importance of staying nimble.
Reliable tools and a secure trading environment are essential. Volatility brings both opportunity and risk. CME Group's simulator, courses, and challenges offer a clear path for new traders to build skills safely.
Regulation and transparency are critical. CFTC oversight and CME clearing provide a safety net not found everywhere. Knowing you're trading on a level playing field lets you focus on making smart decisions.
The FX market is more accessible than ever, with advanced tools and secure platforms. Success requires patience, discipline, and a commitment to learning. By studying past trends and using the right resources, you can prepare for the future. The world of FX is dynamic and full of potential for informed, prepared traders. The opportunities are waiting. Are you ready to take the next step?